Hey guys, welcome back. Last week, Planet Labs reported their Q2 2024 earnings, and with that, they revised their guidance downward yet again. So what I want to do in this video is I want to take their past guidance, compare that to their current guidance, and then use that to arrive at some sort of future expected share price. So to start things off, what I want to do is I want to play a clip from CNBC from October 13th, 2021, where Planet Labs is stating that they are expecting 40% growth for the upcoming 5 years. Let's take a look.
I guess just in terms of Planet itself, I mean, in addition to this being such a big year for human spaceflight, it's been a big year for space companies coming public and courting more investors. And your company is an example of that. It's merging with a SPAC right now. So I guess talk to us a little bit about growth and that growth trajectory. When we talk about renaissance from an investor standpoint, just how quickly are you growing?
Yeah, I mean, exactly. We're going public right this second. It's a really exciting time. We're going to be hopefully on the New York Stock Exchange within the next couple of months here before the end of the year. There are other companies doing that too. Our growth trajectory is really solid. We did just over 100 million in revenue last year, and we're projecting about just over 40% growth rate for the next 5 years. Back on the back of all these applications that I was saying, like in agriculture, like in mapping, like governments with disaster response. The world is in need of these new data sets. Everyone's talking about AI, and it's powered by these new data sets and especially when we're trying to transition to a sustainable economy, data sets from space help us to do that. They help us to measure natural capital. So every company trying to measure its ESG target needs this kind of data. Every country trying to measure its emissions needs our data. We just announced a new fleet of satellites that's going to measure emissions directly, so methane and CO2 emissions, to help this kind of change. And the sustainability transformation is a big economic opportunity, and people don't often realize, but space data is behind that. And so yeah, it's a fascinating time. We're on a high growth trajectory based on those demands for our data.
Okay, so 40% growth for the next 5 years. The video took place 2 years ago, so we're in the second year already. Before we get too far ahead, I'll make a point of saying that they did just guide for the third quarter of 2024, and they also guided for the full year of 2024. So if we simply subtract the past 3 quarters from the full year, we can also arrive at basically what is going to be the guidance for Q4 2024. So let's use that data in the spreadsheets, which is already populated. And I'll click on this cell here. We can get a look at how the guidance revisions has shifted throughout time. So for example, full year 2024 guidance from the July 2021 investor date was 289 million. That was reduced to 268, was reduced to 235, and is now reduced to 223. Before we get any further ahead, what I want to do is just zoom out and kind of give you guys an overview of how this spreadsheet operates. So the general structure of this spreadsheet, we start off up top here with our income statement, followed by our balance sheet, and then our cash flow statement, just like you'd see in any typical earnings report. The section below that is a sort of a calculator and formula section, is an easy way to think of it. We'll come back to that. I'll explain a little bit better throughout the video. And then the section below that, that's going to be your key performance indicators, the stuff that kind of doesn't really fall anywhere on like how to quantify a share price. So think like when acquisitions happened, number of satellites, number of customers, those sort of parameters. The final section is then everything being kind of condensed together. And what we ultimately are trying to find here is the share price, market cap, enterprise value, etc. And then finally, one more thing that's important to explain is on the far right side, we have a multiplier column. So that's either where formulas are being condensed together, or it can also be a cell that you can simply update that will interact with the rest of the data. So it really depends which metric you're trying to manipulate or look at. Sometimes it's like simply an average of past results, or sometimes it can be a way to kind of tweak the overall sheet to take a look at what you're looking for, really. So that all being said, let's jump back to the revenue guidance that we just had. So to find the forward values of what to expect for revenue growth, we can jump down to that calculator or formula section, and we'll even rewind a little bit here. So you can see that this row here, these are the quarterly values for the growth. So to simply put it, this 6.52, for example, This is taking the revenue from this particular quarter, comparing it with 1 year ago, and giving you the percentage change difference. These ones here, this is taking the full year of revenue and looking at the percentage change value between the last year and the current year. An easier way to look at that is this is the overall year, and this is the zoomed in value for each quarter individually. So this is around the time that they went public, the end of 2022, December 8th to be exact. We can see that for that particular quarter, we had 23% growth. That went to 25, called 26, and then we went way up to 60, then 55, 40, 30, 11, and then we're continuing downward to 10.5, we'll call it, followed by 9.5. So the overall year is actually going to land somewhere around 15% based on the guidance that was just revised. As a result, what we did is we're going to go over to the far side. We're going to take this multiplier and we're going to drop that down to 10. Now what that does is you can see it interacts with the revenue above. It actually takes this exact cell. This exact cell is read from up top here into this cell that integrates with this revenue. So that's a complicated way of saying we're going to assume 10% growth for the foreseeable future till things start to look a little bit better for Planet Labs. With the revenue growth out of the way now, the next section of the earnings report that we'd look at is going to be the cost of goods sold, research and development, sales and marketing, and then general and administrative. And you put those all together and you can have an idea of what the operating expense / operating margin is going to look like. The guidance that we're going to use for those is taken from, and we'll go over it for each one, but it's generally taken from an investor day. So for example, the long-term cost of goods sold guidance target is 15 to 20%. And that was taken from the July 2021 investor day. And as you can see, if we use these multipliers here, it's going to put cost of goods sold at a trajectory that will land us at where management has quoted for. So far, management has actually been really good with this. They haven't been good with the revenue guidance over the past year, really. But it seems like they're doing okay with the rest of the guidance as far as guiding towards profitability. So as you can see here, we generally go with the guidance, and using these formulas, we land at kind of the more conservative end of that spectrum. So for cost of goods sold, it's 15 to 20% long-term. For research and development, it's 16 to 19% long-term. For sales and marketing, it's 24 to 27% long-term. For general and administrative, it's 6 to 9% long-term. And finally, that arrives us at 15 to 30% long-term for the overall operating margin. So the remaining sections that we need to populate is the remainder of the income statement, the balance sheet, and the free cash flow statement. And once those are populated, we can kind of have an idea of where the share price will land at. The way that we populate the income statement, I'll show you the example above. We will use the forward values for income tax provision, for example. So to arrive at the future values for income tax provision, what we do is we're going to hop down to that calculator section. We're going to look at income tax provision as a percent of income. So essentially what we do to find this particular quarter, I'll just click on the formula, we'll scroll back up. It simply takes the income tax provision and divides it by the pre-provision income of that particular quarter. And as a result, you can see that it arrives at a percentage. We did that for all the previous quarters. And then over on the far side, that's where we find our average. Now that we have the average, that feeds up into the current income statement that we have. You can see that here. And what that does is it simply divides that average from what we can expect from the pre-provision income tax. So hopefully that's all making sense so far. Essentially, if you're not getting this, just understand it's just a bunch of numbers working together to provide a number. It's just the entire spreadsheet is just one big formula. So now that the income statement, the balance sheet, and the free cash flow statement are all populated, we can scroll back down to the formula section and we can see roughly the trajectory that earnings growth and free cash flow growth are going to be on. As you can see, at some points they're like super high, like 1,000% growth. I don't even worry about those. As you can see, so we're looking at this row here, the earnings growth year over year column, and the free cash flow growth column. We can see that management, assuming that they continue with this operating expense guidance, they seem to be pulling the right levers and they seem to be heading in the right direction. And even if revenue growth isn't as crazy, I mean, if they start just bringing their costs down, I think the Planet Labs is going to do well as far as earnings and free cash flow growth go. We're obviously not going to use the super high numbers. We're actually going to be quite conservative. Like I think on the lower end, you see a patch of like 30 to 40% growth here. And now I don't want to oversell anything. We're just going to go simply 25% growth assumption for earnings and free cash flow. And again, I know that doesn't even, that's, if revenue's at 10%, how can we expect earnings growth to be that high? The callous answer is firing people, and they have been, and we'll get into management in a second here. To wrap up this spreadsheet section of the video, and probably what a lot of you are here for, let's just get to it. Using those growth rates, the 25% for the earnings, the 18% for the overall sales, net income, book value, and operating cash flow, and then the 25% for free cash flow, all three of the formulas roughly land us at 7. So, we're at like, even $3 now, we'll call it. That's roughly 15% a year growth in share appreciation. So, if they do somehow turn the ship and start becoming a growth beast again, this number is going to go way up. But for the time being, that's where we're at. It's, you'll do okay, I guess, investing from here, but that's the number I'm landing at currently. Important to note as well is we do have the investor day in like not even a month now. So they might have some sort of updated guidance on what to expect, and this number might change drastically, but that's where I'm landing at now. One final thing that I want to touch on in this video is that right after earnings, I think it was the same day or maybe the next day, I'll just bring these up on the screen here. We'll start with this one. There were a series of 3 Form 4s that came out. So here, I'm not, that's quite small. We can see that William Spencer was awarded 50,000 shares. So, let's just do the simple math. We're at, let's just call it $3. That's an extra $150,000. Okay, let's look at the next one. Here we have Robert Shingler, another 18,000 shares. All right. Finally, we have Ashley Johnson, awarded, looks like 28,000 shares. And if you read the fine print below, you'll see that these are quarterly installments. So let's just pick on Will, the one running the show there, so it's fair. Keep this $150,000 in mind. That's basically what was just awarded, $150,000. Now, let's remember that we just said that's quarterly. So for you doing the math at home, that's $600,000, and that's now at the $3. Like, imagine if this company was actually performing well. If they were still at the $6 mark, double that money, double that bonus, I should say. Like, that kind of kickback is meaningful, right? So, I assume it's because management's not getting paid well, right? Let's take a look. William Spencer Marshall. That's $610,000 per year. That's the salary. Rob Shingler, we'll call that $500,000 per year. And finally, Ashley Johnson, we'll call that $550,000 per year. I assume that these RSUs are based on performance. But when you cross-reference guidance being revised downward 2 quarters in a row, back to back, on top of the full year already being guided down compared to what was in that video that we just saw. It's downward after downward after downward revision. So I'm not sure exactly what the incentive structure is at Planet Labs. I mean, generally RSUs are based on good performance, and I think that this is. I mean, I'm just gonna leave it here. Honestly, Planet Labs is a public benefit company, but when I see $600,000 just getting thrown around to Will after his $600,000, and then the share price in what has it been 2 years, going down 70%. I'm a little unclear on the incentive structure. Um, yeah, I don't have much else to add. Anyway, I'm still looking forward to Investor Day. I want to hear more about those new satellites. I want to hear what they're going to deliver, and I'm really hoping to hear or sense some sort of optimism from management. Like I don't want to throw my towel in. I think that Planet Labs is a super important company still. I just think they need to kind of maybe have some tough talks behind closed doors. Thank you guys for stopping by. I'll see you guys in the next one, and we'll talk to you soon. Cheers.